Welcome back. Another episode of the Full Subjects podcast. It is our second and much anticipated stats episode. Break down the Fraser Valley Real Estate Board stats. Very interesting one. We have some, I feel like, good news to report back on, which is exciting. So this, I know we're laughing, but it was a very interesting stats package to hash out and break down. So thanks for joining us for another episode, guys. And as always, this podcast is for informational purposes only. Does not constitute any legal, tax, investment, financial, or any other advice. Is not intended to cause or induce breach of any existing agency agreement. Cole, take it away.
All right, guys. So as we always like to do with stats, we like to do a quick market update. So I'll jump right into that. There's kind of two things we're going to talk about. We're going to talk about the Canadian economy. We got numbers for GDP for the fourth quarter of 2025. So how did the economy do at the end of 2025? And then overall, how did it do in the entire year of 2025? Then we'll talk a little bit about inflation, and we'll try to tie that into rates and where we think things are going to go here. With respect to Q4, GDP shrank by 0.6%, which was lower than most economists and the Bank of Canada were expecting. So not good. Projections were worse than expected. Major concerns are to do with tariffs still. There's still a lot of uncertainty in that area. Now, this likely doesn't mean we're going to see a Bank of Canada decrease on March 18th, about 2 weeks from the day of recording this. Things can change between now and then, but that's consistent with what we've been saying and what we're expecting. We're not expecting rate cuts at this time. If anything, we're expecting potential rate increases near the end of this year. But right now, it looks like we're in a holding pattern when it comes to interest rates. And then now if we look at GDP for the year, and we're gonna look at real GDP, and just really quickly here, what real GDP is, it's an inflation adjusted measure reflecting the value of all goods and services produced by an economy in a given year. What this means is it measures total economic output, and the reason they do it inflation adjusted is so that we can compare it year over year. Overall, Canada's real GDP grew 1.7% in 2025. And you might think, okay, grew about 2% 2025. Not too bad, but here's the reality of that. That's the slowest annual growth since we saw the economy actually contract in 2020. And Austin, I'm going to throw this over to you really quickly. What did we see in 2020 that might have caused an economic contraction?
Oh, that's a great question. Pandemic.
Yeah, global pandemic, pretty significant. I think if anybody was alive at that time, and I'm guessing if you're listening to this, you probably are, unless you're 5 years old and you really like the Full Subjects podcast.
Shout out to our day ones.
Right? Yeah, pretty good chance that you understand why that might be. So not a good thing overall. The economy did not do well in 2025. Again, a lot of that's going to have to do with the tariff uncertainty that we saw, as well as a number of other things that led into 2025 from years previous. So not great, but we'll see what happens in 2026. Now, last but not least here, looking at inflation for January, we don't have February numbers yet. January inflation fell slightly from 2.4% down to 2.3%. Not much to say about that. Inflation's holding pretty steady right around that 2% mark, which is what the Bank of Canada is looking for. And again, uncertainty still remains because of tariffs, but it also remains because of the free trade agreement between Canada, the US, and Mexico. That still needs to be renegotiated, and there is at this point no certainty what's going to happen with that. So that's a major factor in terms of where we could see inflation go and where we could see some significant impacts to the economy. And ultimately, I'm going to leave you guys with this. We need less uncertainty overall in order to start driving the real estate market and to help grow the economy as a whole. That's the big thing right now. The uncertainty is really causing buyers to be a little bit more cautious, and it's causing the economy as a whole not to really know what to do, if you will. So that's all I got for today on the market update. Austin, anything you want to add there before we start jumping into Fraser Valley stats?
No, I guess yes. First off, I did just off the bat, I did want to say I did know what you were referencing in 2020. I was trying to think of something funny to say. So
Of
anyway,
course.
I need to point that out. But yeah, you talking about uncertainty, like honestly, I just think of what's been going on even in the last couple of weeks, overseas. Yeah, it's just tons going on right now. And again, obviously there are bigger things and then to worry about than obviously just the real estate market. I don't want to, obviously, I'm not making light of that in any way. All I'm saying is, you talk about uncertainty, life events, decision paralysis. When there's things going on in the world, that's typically like stops people from making decisions at all. And we typically feel that through obviously what we do. But again, obviously pointing out there's more important things going on than what a
100%.
Langley townhouse is selling for, as much as that's what we might talk about in the next 20 minutes. So anyway, just wanted to point this out or point that out. Let's hop into the stats package. So I kind of alluded at this to start, but the headline of the stats package was Fraser Valley market shows early bloom with February sales lift. Doesn't that sound nice, Cole?
Sounds great. And honestly, I think it ties really nicely into the fact that we've had a very mild winter, right? We've already started to see spring kind of come in terms of the flowers are starting to bloom, and it feels like we almost skipped winter a little bit. And I think that's where this headline's kind of touching on as well, is we're seeing a bit of an early bloom in the market just as much as we're seeing an early bloom for spring. Now let's hope that can continue going forward. But before we even start thinking about March, Austin, let's break down the numbers a little bit here. Listings in February. So there was about 2,800 new listings in February, which actually is down month over month. Why do you think that is, Austin? Why do you think that actually listings came down, although we're maybe seeing sales pick up?
I honestly, I always reference back, and this is a conversation that I've had with some of my clients recently. Obviously active listings being higher. And when I'm looking at even the last 3 or 4 years, typically what you see is, spring listings start to pick up, and then it kind of drops off over summer. And then you have like a little bit more of a like new listings, I guess. And then basically things pick up again. So there's kind of like waves in the market. But what I've noticed, and I'll probably be able to basically screenshot this in for all of our viewers. What you kind of see for active listings over the last couple of years is the valley of the graph, which is typically December or January in there. Basically, the valley of the graph that you're seeing from that year is just a little bit higher than it was the previous year. Again, we're just referencing, just the Fraser Valley package, and at Greater Vancouver could be different. But I'll give you an example. When I look at all property types for active listings, so in December of 2021, there was 99 active listings at the Valley, and then at the peak in June there was 5728. Okay? So keep those numbers in mind.
Okay.
When we look at the Valley of 2022, so again, this was obviously, you referenced 2020 pandemic, like these were very scarce amounts of active listings. And that's when we saw prices go really crazy. And then now we're kind of, flipping to the other part of the market. So in December of 2022, which would have been the low of late 2022, early 2020, or late 2022 and 2023, there was 3,200 active listings. So the in that 12-month span, we nearly tripled what our active listings were, roughly. Then when we look at December of 2023, there was 3,773 active listings. So again, the peak was just, quite considerably higher than the Valley of the year before. Then we go into 2024. At the Valley of 2024 to 2025, in December of 2024, there was 5,158 active listings. So again, up 1,400 listings, were a third more. And then when we finished December of 2025, there was 5,721 active listings. And we've seen that active listings number start to kind of creep up. In February 2026, we were looking at 6,774 active listings. So again, why I think, and I've really take the scenic route of explaining this one, so shout out to me. Why was listings maybe down month over month for new listings? It's probably because we're already seeing a lot of that inventory on the market of people trying to sell. One of the other stats that we always look at, obviously, is days on market. It's taking things longer to sell, and I think all of that mashed together is why we're seeing new listings down month over month slightly.
Yeah, and honestly, Austin, I'm curious because we saw December obviously be very slow, and people
Yes.
tend to not be as enticed to put their place on the market in December, and they're like, well, I'll wait for January. So we saw that big push in January. So I think the fact that we're down in February compared to January maybe isn't very reflective of the trajectory or of what we've seen in the past, just because I think January numbers were really inflated as well. So when we're looking at it strictly month over month, I think that plays into it. Your analysis is obviously much deeper than that, which is great. But I think that's going to be a factor in this ultimately as well. And one of the comments that was actually in the stats package are sellers actually waiting for the peak of the spring market? So are they kind of still waiting a little bit longer? Maybe that's March or April, and then we'll see more of an increase at that point. I don't know. Is that where sentiment's at right now? Hard to say, but that's something that was actually noted in the package.
Yeah, what's interesting as I look at this stats package, and again, I know that if you're listening on the podcast, that is not a visual medium, but I'm looking at a really cool photo, so go me. Typically we see new listings in February be higher than January, so things kind of ramp up.
Okay.
What's very interesting to me is both this year and last year, new listings dipped in February as opposed to increase. So, that I think is kind of an interesting piece of data. Same thing with 2021, 2020. Last time we saw this was February of 2019. I'm trying to remember if that would have been during pandemic time or not. No,
February 2019? No, that would have been
before. Yeah, so that's interesting. So yeah, anyway, just multitude of reasons. Obviously, lots going into it, but I think that's a curious thing to point out.
Yeah, absolutely. So we kind of touched on active listings already. Do you want to go into that a little bit more here, or do you want to just jump right into sales?
Yeah, let's talk about transactions, because I think, one of the things that we talk about is it's not just one real estate market. There is a multitude of mini markets that make up the whole real estate market of the Lower Mainland.
Yeah,
and,
for sure.
we're not really in a position where we can break down condo sales in Langley City and Surrey Central and, South Surrey and, all of those different niches. But there's definitely things that catch our eye. No secret that we kind of focus on Langley and Surrey mostly, but kind of Langley, at least for me, is kind of where I do most of my business for sure. So I'm always keeping an eye on some of the intricacies of that market. But how about you can break down the bigger stuff, and then we can dive into the weeds.
Sure, dive into more specifics here. So yeah, there was about 840 transactions in February on MLS, which is a 36% increase month over month. So quite significant there. And it's still lower than the 10-year average, about 38% lower there. But I think the number that really stands out to me there is a 36% increase month over month. That's quite significant. So, but Austin, if you want to go a little bit more into those numbers, and actually, sorry, really quickly before you do that, that bumps sales to active, I can't speak today, sales to active listings ratio up to 10%, which is 2% greater than it was in January. So we're still in a buyer's market, but we're seeing more sales compared to active listings. So that's a good thing as well.
Yeah. So transaction volume up, that is good. Still obviously below the 10-year average. So we're definitely kind of feeling that. But I think that's good news. One of the things that we chatted about even in our office was, and I joked about this earlier in the podcast, but like certain product is doing really well right now. Like if you are in a townhouse and you are in Langley, let me pull this up. I want to say it was like a 29% or 26% sales to active ratio, which is like really heavy sellers market. Sales to active ratio. Yeah, sorry. So in all of Langley, townhomes specifically sold at a 26.6%.
Wow, that's well
That's
beyond the 20% threshold that they usually put as beyond a balanced market. So yeah, that's great.
Yeah, so I mean, so that's great. And then you contrast that. I mean, condos were up at 17% in February. That's good. Detached was at 14%. And obviously there's depending on different pockets, they're even doing better than that. So I believe when I was looking,
Well,
it was Murrayville was really
yeah, and while you
strong.
look that up, so that just says that Langley as a whole did really well because we're looking at the Fraser Valley. So
Mhm.
Langley is actually really helping to increase that sales to active listings ratio. Um, so that's good. That's good to note there.
Yeah, exactly. Yeah, so Murrayville sold at 70% for townhomes. Like that's crazy.
That is crazy.
Well, let's look at Willoughby. Willoughby was sitting around 28.9%, so that's like really strong. Let's see Langley City.
That's really
Langley
good for
City was at
Willoughby
about
because there's a lot
yeah,
of
it's
units
quite
there, right?
yeah. Langley City was a little bit lower, around 19.2%. I mean that's a little bit smaller, but that would still be considered a seller's market. And then what else do we have? Aldergrove. I mean, Aldergrove is even selling at 20%. That's crazy. Coming off a really strong month in November. It was like really, really high. So yeah, that's super interesting data points there. Langley was strong. Obviously, that means that when we look at all of the Fraser Valley, there was other areas that weren't so strong. I think I have a pretty good idea of what some of those are. Yeah, let's. Is there anything else you want to add that kind of stuck out from you from the stats package before we hop into benchmark prices and days on market?
No, I don't think so. I think it was kind of cool that you just kind of dove into some of the areas there that did do well, and we don't necessarily need to touch on the areas that didn't do as well. But I think the point here is that we're looking at averages and we're looking at these numbers, and there is going to be pockets, like Austin said, that are going to do significantly better, and there's going to be pockets that are going to be lower, and they all make up that average, right? So it's good to note that depending on what area you're in, this may not directly represent what's happening in your area.
So if I can be, if I can be a little bit prescriptive with some of these data points that we've just kind of talked about. So just so we can put some practicality into this. When you see as an example that certain products are doing well. So let's say you're in a townhome right now and you happen to be in Murrayville and you see that things are selling at a very good rate. um, you know, that's going to give you more leverage when you go to sell, knowing that people, your product is in demand. And obviously there's lots of that goes into your move. There's criteria, there's budget, there's area that you want to live in. But when we're talking about these micro markets as an example, let's say you're wanting to upsize and you have some flexibility on area, but you're in a product that's really hot right now. If you then decide that you're going to move to an area that maybe isn't doing as well right now, that's going to give you more leverage on your move and your purchase. So it's really good to look at those different data points and kind of break down those mini markets because, maybe you were planning to maybe move later in the spring by the time you get your place ready, et cetera, et cetera. But if there isn't a lot of inventory for those that are looking, they might be also more willing to maybe do a little bit of work. Maybe they're okay with doing those paint touch-ups or some of that, home maintenance because they just want to get into that product because there isn't as much available. So it's good to look at these packages in detail. It's good to chat with your agent or your mortgage broker if they're able to kind of break some of this down and explain some of these numbers to you. And as always, if you have any questions, don't hesitate to reach out.
Yeah, very well said. Let's jump into pricing here. So let's look at benchmark prices now. So as a whole, we saw benchmark prices fall 0.2% month over month. So a bit of a decrease. Detached were right at 0.2%. Townhomes were 0.3%. And then apartments were the strongest in terms of the lowest decrease. So we only saw 0.1%. Now, as Austin was talking about before, different pockets within the Fraser Valley are going to see different things. We're going to see some of these prices go up in different areas. Some of them are going to go down. But as a whole, we're seeing that prices are coming down slightly. And what I was saying is one of the things that's more than likely going to happen is areas where you're seeing really strong sales to active listings ratio. It's unlikely you're going to see prices drop month over month. Doesn't mean it can't happen, but it's likely you're going to see prices remain a little bit stronger in those areas. So I just want to kind of correlate those two things together.
Yeah, and I think part of that also goes into your strategy when you're marketing and you're selling a home. We talk a lot about how the market often has like a personality. Most people don't want to pay sticker price for a place right now. You know, you can be priced super well. You can be, the best if there's multiple in the complex and show the best and whatever. But because of the amount of inventory and because people feel like it's not a strong market right now, often people will come in expecting you to take a little bit off off your list price in order to kind of make a deal. So it's important to be really, have some tough conversations when you're listing and you're pricing your home, knowing that when we look at it on our end as an example, they're breaking news. This is a really great way of explaining it, but you'll know when a sale price comes through. If there's a red arrow with it down, that means that it's sold under sale price. If it's the same color, that means that it's sold for what the list price was. If you see a green arrow, which is really hard to come by right now, that means that it's sold over list price. And again, it sounds funny, but when you're going through, you're seeing most of these units sell for under list price. And we can also look at this as a stat because they track all this stuff. So we're looking at percentage of list price. Your detached properties for the whole Fraser Valley sold at about 96.5%. Your apartments were selling at about 97, and your townhomes were selling at about 97.6. So again, there's an assumption that, if you're priced well, you're probably going to sell, but it still might be for a little bit under whatever your list price was.
Yeah, and exactly what you said, Austin. You have to factor that into your strategy at the end of the day, because no one's wanting to pay sticker price these days. So you have to be strategic about what you're listing at. And if you're in a hotter area, as you said, there's strategies there. And that's Austin's job ultimately, is to talk with you about that strategy and try to get the most value for what you're trying to accomplish ultimately.
Yeah, and if I can add one more thing here
Please.
too, which I think is really important to point out, like list price also, and this is a conversation I've been having with a lot of people right now. List price does not mean market value, right?
Yes.
It's a list price is an offer to treat. You could write, if you see a house that's listed at $1.5 million, you could write an offer for $1. They're probably not going to take it. Breaking news. But people use different things to come up with their list price. Some people look at what their neighbor sold for. That number might have been a year ago. Some people, they price their home because this is what they paid for it at X time. They've done X amount of renos and that's what they're trying to get out of. That's cool. But again, that doesn't determine list price. Some people do dive into the data and the solds and see where they land and, are very precise with their calculating to come up with their number. But again, it's a negotiation is a who is more right conversation. Cole, if it's me versus you, and we're negotiating and we're trying to, determine market value on a home, I'm hopefully going to use comparables saying, hey, this in the building sold for X. This is why we think you're different and inferior. This is what is sold in the area. This is why we think that, this is how we're coming up with our number. And Cole might say, yeah, that's great that you use those comparables. Let's use these ones. And he might find a house that has a similar, he'll use different data points to kind of justify, the price that they're coming back at. So it's important to have those details and information points, because you're also seeing a lot right now of, I'm going to swear, but people just throwing shit at the wall and seeing what sticks. And also people listing homes that, doesn't reflect market value at all. So, and it's important to have those conversations, not only with clients, but people you're working with to, just know list price means nothing to me. That does not determine market value. It's about using comparables and data and information to point to get to that number. And ultimately, you also can't make a seller accept that number. You can't make them accept reality in some scenarios. But there's a lot that goes into it. It's not just, oh well, like we talked about, most places selling under list price right now. That's not always the case, right? Some people have determined that value and somebody's going to come pay that. So just a grain of salt or some information points there.
No, very, very well said. So I think we'll wrap up prices here. Let's talk really quickly days on market. So there were significant decreases to days on market across all three asset classes. So both detached and condos came down 8 days. So they're both sitting right around the 6.5 week mark for average days on market. And then townhomes was the biggest decrease. So they came down 11 days month over month, sitting now down at 39 days. So about 5.5 weeks, which is good. It means things aren't sitting on the market as long comparably month over month. Not surprising given the other stats that we talked about here, but that's good news, I would say. It means the market is trending in the right direction when we look at it as a month over month basis. Anything you want to touch on there, Austin, before we wrap things up here?
No, all I would say is, that's an average. And sometimes you see the places that are 60, 90 longer days on markets that definitely will eventually get an offer. But you also see some stuff 2, 3, 4 days on market that get a bite. So
yes, exactly. So that's going to change the averages a little bit.
Yeah, exactly. So, again, just another data point there to touch on. So
awesome. All right, guys. I think that's it for today in terms of stats. As always, you guys know where to find us. Austin, I'm doing your job here. I feel weird even saying this.
You're signing off? My goodness, who are we?
I know, right? I don't even know what to say. I feel like I'm out of. I'll let you take it from here. How about that?
Oh, okay. As always, guys, thanks for listening. Feel free to share our episodes if you found it useful, or if you got something out of it. Friends, family, post it on social. We always love those tags, of course. And if you haven't, make sure you're subscribed. So that way you get notified as soon as we drop an episode. And leave us a 5-star review. We do appreciate it. Signing off. We will see you guys next week.
Take care, guys.
Cool. Yeah, I was waiting for Cole to say take care. We'll see you next week.